Hello and welcome to another edition of Executive Corner Expert Talks. I'm James Preston, and for this Expert Talk we're focusing on iconic Australian business Cash Converters. Established in Perth in 1984, Cash Converters is now an ASX-listed, ASIC-regulated global business operating online and in 18 different countries with over 700 stores. They're serving over 1 million active customers annually in Australia alone. To break down the recent release of their financial results and take an in-depth look at the business, Managing Director of Cash Converters, Sam Budiselik, joins me live on the show. Sam, a very warm welcome to you.
Hi James, thank you for having us.
Well Sam, great to have you here. Let's start with the release of your annual financial report. And it's astonishing to see your company's strong financial growth in such a challenging economic environment. What do you put this down to?
Yeah, James, I think our business is obviously really well known for our store network, and we've got 155 stores in Australia, roughly half franchise, half corporate, and over 500 stores offshore. So entering into this unique challenge of managing through lockdowns and making sure our people and our customers were safe was obviously challenging for us, like it was for many other businesses. We have invested heavily in our digital platform leading into this period, and it was quite fortuitous. And I think we really had a tale of two halves. We were entering the financial year thinking there'd be a big rush on demand for borrowing as people were working their way through what lockdowns meant and what this whole new period meant. What really happened in the end with the wave of government stimulus that was somewhat unexpected, really flooding our customer segment in particular. We saw the nature of our short-term sort of loan business, and that's our big engine. A lot of people choosing prudently to pay down their loans, their personal loans, and any residual stimulus cash thereafter was spent on inventory in our stores. So it was a bit of a blend of that stimulus impacting our loan and credit profile and demand, resulting in our loan books paying down, our inventory selling. And then sort of coming into the second part of the first half, we saw a normalisation of that demand profile, and our gross loan books, we entered at about 240 mil of gross loan books, dropping down to about $140 million. So quite a significant pay down of, around 40%. And then we've seen that sort of in the second half start to normalise and grow again. So our online assets performed really well. Lending and retail up 13-14% year on year. When we trade on both of those business lines online, but it was the physical store impacts I think our people were really worried about, and to deliver that revenue decrease but a good profit result was testament, I think, to managing our cost base well, not claiming JobKeeper, thinking this would be going on for a while, and really resetting our business for this new environment.
Yeah, you mentioned there the impact on physical stores itself. I mean, obviously the pandemic has played havoc with thousands of companies, big and small. What were the impacts that you felt most at Cash Converters from it?
Yeah, I think when you look at, particularly through the year Victoria, going into that extended lockdown for over 100 days, across our store network, we anticipate we lost about 10% of our total trading days. So for a business that has a big store footprint, that was obviously, a huge impact. But I think we remain committed to dealing with our customers through our store network. It's really important that we still have that physical presence. And we're a big employer of a lot of people, obviously providing that service. But I think pleasingly the investment in the digital space that was starting as a customer service and experience initiative, allowing our customers to go online and manage their obligations and view their loans and make payments and change payment dates. That position sort of changed a little bit coming into this period, obviously, where we didn't even have our physical store network available to us. So in Australia, that the digital assets were really important in terms of maintaining that continuity and also growing through this period. But also offshore, we've got an international network of franchise businesses, over 500 stores offshore. And as many different global approaches were unfolding, we were managing, the impacts on the global network as well. So we moved early on fee waivers to support our franchisees. And, I think that was really beneficial just in terms of making sure the network remained, sound, and we remained strong, from a balance sheet and cash perspective.
Well, look, the name cash converters elicits the concept of cash for items. Obviously, it's not quite as simple as that, given you can get credit debited, but there has been a lot of talk over the past 18 months, and we've seen today, for example, in a press release from 𝐊𝐵𝐵𝐵𝐵𝐵𝐵𝐵𝐵𝐵𝐵𝐵𝐵𝐵𝐵 about a concept of shifting towards a cashless economy, which is, I suppose, being pushed by not just the New South Wales government, but other places too. So I guess if that is to eventuate, what's your position on the concept of a cashless society, and how would that impact the operations of cash converters?
Yeah, that's a great question, actually. I mean, I think having cash in our brand name, it's sort of the whole business is centered around trading and lending. So, you know, historically a cash-based sort of transactional business. Now, look, our earnings are really half generated from our small loan business, which is unsecured small loans up to $5,000, and our vehicle finance business, secured car loans. That business really has been through a transformation led by customer behaviour over time, whereby physical cash in hands offered through store, you know, that market really has gone, and it's probably a function of the way people in the modern day are receiving cash, which is on the new payment platform, the government platform that's enabling us to instantly disperse cash into bank accounts. Some of these technological advances have just eliminated that need for a physical cash exchange. So I guess the lending business has really morphed in that direction of cashless anyway. The retail, the transactional side of the business, obviously predominantly credit or debit card transacted, very little cash transacted through stores as well, as people have chosen to pay on phones and pay with credit cards. So it's had a really beneficial impact to our business, where historically we were, you know, trading in a lot of cash and having to carry a lot of cash and shift a lot of cash around. All of that elimination due to technology has saved us to have to do that. And I think people, the speed of the cash payments now and the transactions are so different that we're pretty comfortable. We've ended up moving in that direction anyway, just due to that customer dictated behavioural pattern. Also looking at bank statements and analysing bank statements, we get a really good insight into our customer base and how our customers are using cash more widely or not. And obviously the advent of buy now, pay later and some of these other you know, financial services are prevalent. So I think people in general are comfortable moving away from physical cash.
I mean, I heard you talking there about the transaction speeds, for example, of using online payment options. One thing that we have been seeing in the past couple of years is the rise of crypto, for example, and that has arguably the quickest transaction between any kind of currency. Is that something Cash Converters is potentially looking at delving into, or is that a little too far away?
Yeah, not us, James, at this stage. Look, I think, you know, knowing our customer needs, we're very much about providing a financial service to people who are excluded from the mainstream because of a low or thin credit profile. So, you know, our core customer need is really for cash solutions. We're trying to do that better over a longer term and almost to provide a financial service to our customer set. You know, over 4 million Australians in the non-conforming market that can't access finance. So a pretty sort of basic need that we might take for granted is an offer to everyone in Australia. That's where we're really focused.
Now, Sam, you do, of course, have global operations, which you've mentioned as part of this interview. Part of that as well is work with Care4. Now, exactly how does that operation work in with the Cash Converters brand, and how is it positioned for the future?
Yeah, it's a really interesting one, James. I think locally we partner with eBay and Gumtree transacting through their marketplaces. It's good for both parties. We bring, you know, a lot of inventory. They bring eyeballs, and it works quite well together. Even though we've established our own retail trading platform, I think there's really an important partnership there. Globally, as we're looking at sustainability and the environment, the Care4 arrangement came about through an initiative they launched to facilitate a circular economy. So as a big white goods and electronic goods, you know, new seller, they look to Cash Converters over there for the expertise in facilitating what they call the circular economy, or buying second-hand goods. So if you could imagine walking into one of their hypermarts, which is sort of like an Aldi, but, you know, on a much bigger scale with a lot of furniture, white goods inventory. They have a within their main hypermart, on you know, sort of to the right as you enter, there's a cashies, they call it a occasions operation. The idea being that consumers, as they're going into Care4 to buy goods and whatever they're after, they're encouraged to take their second-hand items into that cashies occasion store, and they are recycling goods as a result. So the Cashies occasions operation at the front of the hypermart will be buying and selling like a Cashies Australian store with the second-hand inventory, and hopefully ultimately preventing these items from going to landfill and facilitating a second-hand circular economy.
Now, you've already talked about small loans and also delving into the vehicle side of things, and at Cash Converters, demand for vehicle lending exceeded more than 4 million Aussie dollars per month towards the end of financial year, which are incredible figures. How do you envision that offering developing in the coming months, and can it get even bigger?
Yeah, it's those numbers that we're receiving are really just in the non-conforming part of the market too. So prime borrowers might be going to one of the big four. Our customers are in that finance space where you need a provider that understands, their needs and their position to extend finance. So what we've seen with that second-hand car market too, particularly in the non-conforming or subprime space, through COVID, it's really been extreme, the demand profile. I guess as people have wanted vehicles rather than travelling public transport just to get around in general, there's been a huge demand call. Less new cars arriving due to the supply chain interruptions cause a demand squeeze, and people are really willing to bid up the price of second-hand cars. So you have that impact of less demand, prices spiking, and as a lender, when we're looking at a secured loan against that product and a reasonable loan-to-value ratio, if the value of the car moves substantially, it causes the whole business to shift. So we sort of had to navigate all of that. At the same time, we rebuilt our product set and our risk scorecards. When the COVID impact really hit, middle of the first half of the year, we pulled out of the market, and we took an opportunity just to rebuild our platform. And then as we saw the market starting to normalise a little bit into the second part of the first half, and then into the second half, we went back into the market. And we operate Greenlight Auto as a B2B brand that deals with brokers and dealers in that part of the market. So we provide finance to broker networks that are selling to the end customer. So the technology we've had to deploy in that space, I think, was really important to enable us to very quickly assess an applicant and arrive at a position where we can say to the broker or the dealer, look, based on that profile, we're willing to buy that business, and we'll buy it at this price. So we've leveraged a fair bit of the unsecured personal finance technology that we've got in the business across into that B2B space, and that then enables us to start to look at a B2C car loan through the Cashies network as well. So it's really quite exciting, but clearly a big amount of demand coming into that business, and we're really confident that now we're sustainably growing that loan book. It'll be a great loan book over future years for Cashies as we move into a diversified loan book space of secured and unsecured.
Yeah, well, it does seem like you really do have that momentum continuing on into the second half of this year, and obviously we saw a huge uptake in the second part of the 2021 financial year. On that note, what are your plans for leveraging technology to release new products and then reach more customers?
Yeah, we really did see a big spike in the second half. So the unsecured business is experiencing, north of 30% application growth rates in terms of numbers coming in versus the first half. So things are kind of getting back to normal, and people are out spending, and if anything, probably spending a bit more than they were originally. So that's great. I think with our data, our platform, and our analytics, we process 40,000 applications online a month. And work through responsible lending overlays. So we have to, consider expenses and income and categorisation and make sure that our lending is responsible. So you'll see our approval rates online sitting at around sort of 20% because, working that through, not everybody's in a position where they can borrow, and the buy now pay later providers contribute to that expense base. So we treat that as an obligation or a loan when we're assessing how much disposable income is available for a loan. But what that allows us is a massive warehouse of data, millions of bank statements, hundreds of thousands of customers coming through our business, and that data we've really been working on over the past few years, our machine learning and our AI. So our analytics to start to look at loan outcomes based on profiles of borrowers is allowing us to upfront now predict consumer behaviour as people are entering the business. And I think those risk models are really where our IP sits and where the IP needs to be for a lending business in our part of the economy. So we've got a really slick platform and a cool sort of setup in terms of the fintech. which everybody needs these days because you just can't have unnecessary customer friction on that journey. But really where the value comes in our business is access to a massive amount of data that we can now start to use to generate insights about where people are going, what they might need, new product insights, other behaviours on bank statements predicting, what people might need from us. So we're extending our loan set. I think the market's really got to move away from that short-term, high-cost kind of product. I include buy now, pay later in that. If you're incurring late fees and you're annualising those late fees, it can mount up. So we're really focused on a longer-term, lower-cost kind of loan product. And we're also really trying to personalise risk pricing in our market, which is really, I don't think, ever been done before. So under the National Credit Act, our fees and our charges are capped and legislated, which is sensible. So we can't just set our own pricing. There are laws around that. But what we want to do is sort of go that next step and say, look, whilst there are caps in place to protect people, we don't want to treat everyone the same. We've got the ability now to start to treat individuals as individuals and offer personalised risk pricing in our markets, which I think is really exciting and will be a great benefit to our customers, I hope.
Well, Sam, the two takeaways I've got from that is, one, you've got an enormous amount of data which allows you to do some incredible things with it, which also kind of has me concerned about the whole machine learning concept and potential Skynet deviations coming out in the future. But I'm sure it's all responsibly sourced, especially when we consider the amount of loans that you knock back. I mean, you mentioned they're 20% for approved applicants. It's great to see that it's not simply money throwing after money, and it is very much a case of you need to meet this certain criteria. Just before we wrap up here, Sam, anything else you'd like to share with our viewers?
James, I think we've got, like we've said, we've got growing markets in our part of the economy. We've got a growing market share as a big dominant provider with our scale. Like you say, if we can take our technology and we can grow into new markets and customer segments, I think that'll be terrific. But you need a big scale, you need a big platform, you need to be able to invest in your tech, as we've spoken about. You need a strong balance sheet. We've got over 70 million of cash still on our balance sheet, allows us to consider many different reinvestment opportunities in our business. And like I say, that new product development I think is really exciting. It'll see the future loan books of this business, I think. And ultimately, we've got that strength to back up the interim dividend declaration with a full year-end declaration of 1 cent fully franked to take the total to 2 cents fully franked. So great growth profile, decent yield, growing markets. I think we sit pretty well to continue to dominate.
Absolutely. I think there's a very strong future in store for cash converters. And Sam, it's been a pleasure chatting with you today. Hopefully we can do it again very shortly.
Thanks for having us, James.
Wonderful. That is Sam Budiselik, the Managing Director and CEO of Cash Converters. And if you missed any part of that interview, or you'd like to browse our extensive catalogue of expert talks, all you have to do is head across to our YouTube channel, 𝐊𝐿𝐼 Media. That's it for now, but remember, stay apprised and invest wise with 𝐊𝐿𝐼.